traders. I hope that you are keeping well, and welcome to another tutorial this week for Invest Beyond. Today's tutorial, we're basically going to be focusing on the concept of risk on versus risk off. Now, this is an extremely important concept to grasp. In my opinion, it is also one of the foundations of my strategy. And outside of technical analysis or anything to do with technicals of actually trading, it is understanding the overall fundamental landscape and investor sort of sentiment. Why this is important is because obviously investor sentiment spills over into the currency market massively. So what we're going to do today, before we look at any charts, is we're going to simply break down what exactly risk on is, what exactly risk off is, and then we're also going to break down the currency pairs that fall into each category, why they fall into each category, and how we trade them on the back of sentiment. So what we're going to do first, just got to Google Docs open up here, and then we're going to look at some charts after this. Obviously, the first thing we need to do is we need to identify our categories within the currency market. So we're going to simply split these up by risk on, or in other words, we also call them commodity currencies. Now, why do we call them commodity currencies? Quite simply because the currencies are linked to the price and movement of commodities. This is an extremely important concept to grasp, because we have to understand, like I said, when we look at correlations in the market, these correlations do come out beautifully in the FX market when we look at commodities or equities or anything like that we're looking at. So looking at basic risk on currencies, what we have is we have CAD. So we have our Canadian dollar. Why is Canadian dollar a risk on currency? Purely because we need to think about the correlation to oil. One of Canada's biggest exports is oil. Therefore, the price of oil does directly affect the price of CAD, which is why when we're trading oil, we trade USD CAD. When oil's rallying quite hard, we usually see a pickup in CAD strength as well. So you want to think about the two and the correlation on that. So CAD is definitely one of our risk-on currencies. Often when energies are pushing, we do see a push on investor sentiment in terms of positive sentiment, because usually when energy shares are pushing, we will see equity indexes also tend to push alongside that as well. Secondly, what do we have? We have AUD. Aussie is a strong commodity on the back of, yes, gold, but more so currently where we're looking at the correlation on AUD is with our equity market. Main equities that we're looking at is the S&P 500 when we're trading AUD. So AUD, there's another commodity currency, another currency that basks when risk on is on, when investors are feeling risky, as you would have seen recently with the massive rebound in the S&P 500 from the coronavirus sell-off. We'll look at the charts later, but you'll see the correlation AUD as well. It's exactly the same for New Zealand, another commodity currency. Currency, again, drastically affected by investor sentiment. These are all high-yield currencies, which basically means that you can Google it, but they are high-yield currencies. So these three currencies push up quite nicely when we have a risk-on environment. Other one we need to look at is GB. We're going to put these in a little separate one, just under risk on, because they're not necessarily commodity linked. However, they do usually have a positive traction when investor risk is high, and that is with GB. And the second one is obviously Euro. So these are two currencies where they do have a higher risk, and usually, like I said, when investor sentiment is pushing towards risk on, we will usually see a rally in GB, and we will usually see a rally in the Euro. Why? Because when we peg them against the different risk-off currencies, so we're looking at risk-off currencies now. Risk-off currencies are technically what you're looking at for safe haven statuses. So these are usually the currencies that investors look for when they want a more safe bet. So risk-off currencies, we're looking at quite simply the obvious ones: JPY, CHF for Swissy, and USD. USD more so recently has been the weaker of the risk-off currencies, but those are the basic risk-on, risk-off currencies, and how they work in correlation. As we'll look in the market quickly, what we can generally expect if investors feeling risky. Why would they be feeling risky? Generally because we will have investors are feeling risky. There's a couple of things that we're going to look at when investors are feeling risky. First one is improved fundamental, just improved economic data, and also just general risk based on current world affairs. So a prime example of a current world affair would obviously be the vaccines that are currently in processing for coronavirus. We've seen the market push drastically whenever there's been a mention of vaccine, purely because what this does with the vaccines, as an example, is it provides optimism for investors that the coronavirus is going to be, done and dusted very quickly. So the optimism is what they're looking for. And trading on optimism basically means that they are buying at a lower price, looking for the price to push up, and they will continue to buy on that, obviously. S&P has been a fantastic example of that. So if we're looking at a risk-on environment, there's a couple of trades that we're going to be looking to go long on. For our longs, what we want to be looking at is longs on AUD JPY, AUD USD, AUD Swissy. Those are the three focal points for AUD, and it is exactly the same for all the other currencies. So AUD New Zealand JPY, AUD USD, and New Zealand USD, New Zealand JPY, CAD, USD CAD, CAD JPY, CAD Swissy. Again, those are the ways we're going to be looking at for risk on environment. What we can look for, obviously the inverse on UCAD is we're looking for shorts. Just to put that there, short. I don't trade CAD USD. Obviously, I trade USD CAD. So you're looking at the inverse on USD CAD. And for risk off, wait one sec. And then obviously GP longs on GB USD, GP JPY, and GP Swissy. I'm going to put this document in the YouTube channel as well that you can download just so you can see it and keep hold of it. We've seen Euro basking as well in the risk on environment. So obviously Euro JPY, Euro USD, and Euro CHF. Now looking at risk off, it's obviously going to be the inverse, right? Because we're looking at investors who are shy or not wanting to put their money towards riskier assets. Longs, so we're looking for shorts here. Let me just clean this up for you guys. I'm just typing this out so I put it up. Long, risk on environment, long, risk off environment, short. And again, we're looking for the inverse of all these. Excuse my terrible spelling. And as you can see, based on how we've been trading recently with the risk on environment, we've obviously been buying a lot of these pairs and profiting massively. When we get a bit of seesaw in the risk and we do have some range bound on the major pairs, what we usually find is we're waiting for a fundamental catalyst. The fundamental catalyst will come from any of the economic data releases or any tweets or news that pops up that causes investors to sharply invest in either one of these assets, being risk on or risk off. So that is generally the setup of risk on, risk off. As I said, you're looking for price to react to these pairs. So if we're looking at a risk on environment, we're looking to take longs on these pairs based on the fact that the commodities related to these pairs, be it equities, oils, or anything like that, are pushing higher, right? Because we've established that investors are feeling risky. That's the basic concept of risk on, risk off environment. And now let's have a quick look at TradingView, and we can actually see the correlations in action. Obviously, we're going to pay attention to the coronavirus sell-off, just because if we go on to our S&P 500 over here, And let's just pay attention to this structure here. Wow, it's really blue. 1 second, guys. So we're just paying attention to this structure here. Obviously, the S&P is back to highs as, coronavirus sell-off, bit of scam, whatever. But now let's look at AUD, JPY. Let's look at all the AUD crosses, right? Looking at the weekly structure. Exactly the same from the same dates here. We had the coronavirus sell-off, and you can see that the market has reacted beautifully in tandem with the equities market. Exactly the same market for AUD, USD. Keep in mind these correlations are not to the T. You don't just buy, but what you look for is you can see equities pushing. You're going to look for positionings based on your environment. So like I said here, you don't just buy it on the correlation. You look for the setup to form across the currency pairs. You look for the currencies to set up. Let me just close this 1 second, guys. Sorry. You look for the currencies to set up their positions based on the correlations. CAD JPY, again, you can see coronavirus sell-off slowly starting to take off, looking for long shortly on the back of that. CAD Swissy, again, coronavirus sell-off. We've had a bit of pickup here. But if we're looking at oil, oil, again, see how it marries up with the equities. We've had a sell-off, equities pushed. It's slowly regaining. I think oil is going to have a little bit of a pullback before some more potential longs. New Zealand JPY, exactly the same. Huge sell-off on equities and commodities. Huge pickup on equities and commodities, and it's come back up through the roof. GBUSD, no different. Huge sell-off, risk off. Risk on picks up, and we're off again. GB New Zealand, a little bit different. Obviously, two risk on currencies. GJ, breaking down, breaking back up. GB Chef, breaking down, slowly, hopefully about to break up. So you can clearly see that these correlations exist. So like I said, whenever I'm talking about risk sentiment in the market, these are the currencies and these are the setups I'm looking to play based on these environments. So your investor sentiment is key because that will kind of give you clues as to what positions you're going to be looking for across these set currency pairs, right? So if people are feeling risky, we're looking to buy AUD, we're looking to buy New Zealand, we're looking to buy CAD, and we're looking to buy GB and Euro, and vice versa. Obviously, USD has become a bit floppy recently because there's a lot of external factors weighing down on that, elections and everything like that. But this is the general concept of risk on, risk off. It's a very easy concept to understand. You just got to kind of get it in your brain and understand that this is how it works. And like I said, you're not looking for straight buys or sells on these pairs. You're looking for the setup to form in the form of patterns, breaks and retests of any resistance levels, anything like that. And that's it, guys. So if you have any questions on it, if there's anything I can do to help you out on that, please do let me know. I do put a lot of fundamental data in the group. And I do take a lot of trades based on data because you can make the expectation of, NFP was a prime example. I do think we have a bit of a dead cat bounce at the moment on the dollar. What I purely mean by that is just NFP is giving it a boost, but I think it's only a temperamental boost, to be completely honest with you. I don't see much traction coming in the dollar right now until post-elections, and also the stimulus package has been agreed. But let's wait and see on that. But I will put this document I will put a Google Shared for it in the YouTube video. Please do download it. Please do have a read about it. Look at it, see what you think. But that's the general overview of risk on, risk off. There's not a lot to it. It's just a case of being on top of everything that's coming out in the news and then being on top of all the data. And then that way you can look for correlations across the commodities and the movements in equities, oil, anything like that. And you can make a rough estimate on where you think the reaction is going to be across these currency pairs should they set up in the formation that you're looking for in correlation to data and investor sentiment. You can also search online. There's an IG sentiment index. Let me see if I can find that actually. Indicator, let's see. No. Risk. No, it's called investor fear. Here we go. Fear and greed index. This is the one. So we can see this clearly depicts risk on within the market. We can see that investors are pretty greedy at the moment, so we are still within risk on environment. Should we dip to 50, we're looking at, we're in the middle. Investors are not very, but we can see for the last month, investors have been greedy, and we've been greedy with them, guys. So let's just stay on top of it. Obviously, I think this week's going to be a little bit tricky, but let's see, guys. That's how you measure risk on. I'll put this link in the YouTube as well as the sheets. And like I said, if you have any questions, guys, please do let me know. It's a basic concept, extremely important concept. And if you're liking the content, like, comment, subscribe. Let's get this out there, guys. Anyway, let's get trading. Peace.